Hi, welcome to this video day, which is on the 27th of September, Sunday. It's our weekly Forex forecast. Now, in terms of this video, we're looking at the pairs that we think could offer really good risk-reward trading opportunities for the week ahead. And this week, there's plenty of pairs to look at. We'll go over to the charts in just a moment. Now, in terms of the last weekly forecast and other updates that we've done, I've been saying we're looking for a stronger USD and JPY. And USD, JPY now both firmed up, and I think they're both now uptrends, and I think they're going to appreciate further. And I think we are going to get nervousness in the markets and a move to safe haven currencies. Both the dollar and the yen, of course, are safe havens. I think, US elections are coming up, and I think stock markets are going to sell off into the election. Now, in terms of the stock market sell-off, the impact of US elections on FX markets, I've done a separate video on the subject. You can just check it out by clicking the link which is beneath this video. It's also the video next to this one on our channel. I did it just a few hours ago. So I'm expecting plenty of volatility in the weeks going forward. Market's looking really interesting. Let's go over now and take a look at the charts. But just before we do so, please do keep in mind it is my view as of this specific moment in time. It can, of course, change in line with the market action and conditions. If you want all our trading techniques, our daily technical sentiment analysis of 14 FX pairs, just click on the link beneath this video and you'll get live access to our member centre. You can also join our Facebook group of traders and follow us on Facebook as well. And I'm just doing some analysis for the weekend in the member centre, so we're just going to use the charts from there. So let's go and take a look. Right, just in our daily market update, we're going to go to the first pair we're going to look at, which is Euro USD. In terms, just before I go through the trade setup, just for anyone new watching our videos, we use a very simple technical analysis. Okay, so really focus on big levels of support and resistance. So we're doing nothing that is complicated. Now, in terms of before we do our technical analysis, we've always got a directional bias first of where we think the pair may go. We study the sentiment behind the chart. So we want to know where the big money is positioned. Once you know where the big money is positioned, then you'll get advance warning of, let's say, breakouts, or be able to establish targets. You can't do that just from pure technical analysis alone. At the end of the day, it's the sentiment of traders that makes the chart. It's not some mathematical equation that a lot of traders believe. All professional traders use sentiment analysis. You should too. If you just trade purely technically, you'll never catch and hold big moves. And it's not difficult to learn sentiment analysis. We've got plenty of videos on our channel, and also you can join our mailing list. I'll be sending out a lot of info on reading sentiment. Now, in terms of the euro against the USD, let me just go through the chart. We did come up strongly from 108, a little bit of sideways 112, then up, and then we went up to 120. If we went up to this 120 level, we know from our favourite sentiment tool, the COT Net Traders Report, the speculators are holding a 2-year net long extreme in terms of their positions. They're heavily long. The commercials, who are the smart money, heavily short. So we felt we would get a move to the downside. Now, there is obviously support here. Come down, test it, rally, try and get higher, roll through the level and down. Okay. Now, if we look at the COT Net Traders positions, dealers are commercials, they're smart money, speculators are in grey. Now, in terms of, we really just want big divergence on this report. Did I say earlier you can look up our video COT Net Traders Indicator to learn more about the tool? But just briefly, we want big divergence. Speculators heavily one way, commercials the other. This is in 2017. The euro tops out, then falls well over 1,000 pips. Okay, speculators again have gone really long here. Commercials have gone really short against them. We should see a big fall. Okay, Now, going back to the chart, I've put the level at the moment as 112. That's achievable. There's still a lot of speculators long. You've got limited upside, a lot of downside. So if we were to rally back towards this level, 117.60, just below the round number 118, I think you could sell. I do not see us going through this level here. Our stop is behind it at 118.80. We're in at 117.70. It's just 150 pips profit so far. But rallies back to the resistance or sells. And I think, yeah, if we just go lower from here, just go down to 112, so another 400 pips ahead. And I think actually we will be extending this target on the downside. Just too many speculators long of the euro. We're obviously expecting a move from risk, okay, which is bullish of the safe haven USD and also the JPY. And I want to flick over to another trade setup I really like, which is this one. It's EURJPY. EURJPY. Now, in terms of this pair, I really like it. The euro showed good strength on the JPY, just like it did on the USD. Into the 126 level, though, you see pokes above. We're not really following on. We've decided to come in at 125.20, and we've got a break down now to 122.84. So basically, yeah, 230 odd pips profit. But I think there's way more profit to come. And in terms of this pair, this 124 level now is really big resistance, where we struggled to break up there. I'm going to draw my line all the way across to these candles here. Okay, so it's a big level of resistance now to the bulls. You can sell into 124, just about 100 pips higher. But I would, if I was coming in fresh, I'd just put a trade in at market, add another one maybe in on a rally, okay, and look for a move to 118. Okay, so basically, what's that? That's what, about 480 odd pips from where we are now. And if we turn south, we can bring our stop down, obviously. But this pair going down, yeah, obviously the yen and the dollar going up on safe haven flows, yeah. But in terms of the euro, yeah, the fundamentals are terrible for the zone going forward. The market's just way too bullish of the zone anyway, so that's going to be additional pressure for the euro. So I really like the look at this pair. Let's go back to the majors. Right, the AUD against the USD, and I think this one has broken down. Gone tight, sort of early entry at 72.70. We've snapped two key levels of support, and we're sitting at 70. If we break below 70, another 500 pips to the downside. Let me just show you this section on trading views a bit more clear. If we look at the Aussie dollar, look at that for a rally. That's 35%. Okay. Now, in terms of the way the chart has moved, obviously got new highs here. Can't get anywhere near these highs. Just very low volatility. We roll over to the downside, and yeah, nice breakdown through 72. That's really key resistance. And you got leveling resistance in between 71, let's say 71.70, just here, okay, on this red. So you can sell back towards the big red candle, the 72 level, just look for rallies to fail to get short or just come in through 70. If you get big risk off, AUD will be going down. It's extremely overbought. 65 is easily on the cards. It's been supported by strong commodity prices. But in a video I did recently, I was pointing out that iron ore prices, Australia's biggest export, had started to fall, and you can see it here. They rise strongly, that's 54%, and they roll over to the downside. Okay, I expect this whole rally to be retraced and really pressure the Aussie. When we rolled over through 125, that is when you had the breakout lower. Okay, so yeah, a lot more downside in the AUD. Where are we going next? Sorry, I need to go back to my daily update, and I'm going to go to the Canadian dollar because I've gone past it. I'm bearish of all commodity currencies, and I'm really liking the look of this. USD comes up, and again we've got an early entry. It's about 250 pips so far, but I think Yeah, the way we're looking at it now, if we break above the highs, you've got double top there, yeah? 134.30, plenty of upside because we should go up to 140. And then the stop, our stop is presently behind the second level resistance here. We can bring it up behind this first level resistance. We get a nice big blue. So yeah, the dollar getting ready for big moves everywhere. It's shown some strength. I think it's going to show more. Yen is obviously looking good. I want to look at another yen pair, which is going to be AUD JPY. All right, it's AUD JPY. Now, in terms of this one, again, we're an early entry. Got about a couple of hundred pips, but I'm hoping that's going to be more. Now that we've rolled over, we've broken a key support level at 76, and now we've moved below 75 as well. So it's going to be a sell on the rallies. So you can see, I'll just bring it on trading view. It's pretty easier for you to see. 76 is really, really strong resistance up here. But I think, there is the level to sell back to. It's around number 75, which is this cluster of candles here. So sell back to the round number. If we don't get there, just to sell through 74, we should go down to 70. Okay, so another 400 pips. We may run on even lower. So possibly down towards the 67, 70, 67, 50 level, this cluster of candles here. So between 400 and 650 pips on the downside in our view. But I wouldn't rule out a rally first of all. But Aussie dollar for us, USD against the JPY and against GBP look really good. Or the Aussie dollar looks a really good sell. And yeah, if you can't decide which is the best, you just do it, treat it as one trade and do all three, which is what we're doing. I'll come to GBP-AUD in a moment, but going back to my page, I want to go and look at USDCHF because this is a really good COT net traders positions trade. Basically, the USD comes down, and when we get in this zone here below resistance, speculators build up their largest short position in a decade, 10 years. Well, commercial smart money, sorry, I spelled money wrong, hold a 10-year high in terms of long positions. So speculators have sold heavily, commercial smart money is bought, and up we come. Okay, so broken out above resistance, we should easily run to 96. I might extend this to 98 just due to the size of the speculative short position, which I think is going to get hit on stop. So far, it's a kind of nothing profit, 150 odd pips, but I'm looking for a lot more. 96, then 98. Now, in terms of your trading or looking at the euro, say this frequently, look at euro proxies. This is USD SEK, US dollar against Swedish krona. And, sometimes what you get is when the euro goes down, then basically the proxies that go down quicker. And I'm looking for this, I'm looking for the Swedish krona to go down quicker on the USD than the euro. And there is no COT net traders positions for this one, but from our sentiment studies, speculators are massively bearish. And down here, when we're trading sideways, you've got a general consensus that the USD is going to sell off even further. So media really bearish, economists, analysts, etc. It doesn't go lower. It picks up traction to the upside. Now, though we've got a little bit of profit, we're in at 881, at 914. If we get up to 10, that is about a 12% rise from our entry. It's a fast-moving pair when it gets going, and I think we'll get up to 10. It's one of my favourite positions at this moment in time. Right, let's go and have a look at a few more crosses. Right, the cross we're looking at here is GBP AUD. I've said obviously I think the AUD is going to get hit hard. The USD and JPY, also the GBP. Now in terms of this pair, see a nice fall here, a lot of red candles as the market perceives that the UK and the EU are not going to do a trade deal. At the time we said that this move is exaggerated on the downside. We held 175. We just wanted to come off the level. We did at 176.60, and now we're about 400 pips higher. But this move has only just begun. We've come through the 180 level. Okay, I think we're at 181.16. Go through this high here, which is about 181.40.50. I can't remember exactly, but go through the high. So you should follow up another near enough 900 pips. Stop behind the 180 level. Looks a really good risk to reward trade. Pound very, very oversold generally. If we get risk off, pound will fare better than the AUD. We also like it on the NZD as well. We've done separate videos on the GBP a couple of weeks ago, or a week ago, can't quite remember. But this big fall here, it's a massive fall. It's over 1,000 pips, obviously to do with the trade deal between the EU and the UK. But there was also a little bit too much optimism about the Central Bank of New Zealand, and that kind of dissipated, obviously, the worry about a no trade deal between the EU and the UK in the price as well. We get a little bit of choppy action. You get this turn up candle here above the key support level, which is a weekly level there, 190. I didn't draw the line in, but you can see it comes down, immediately rebounds up, and now we're sitting below 195. We go through 195, 700 pips up to 202, and we could even go up to 210 in my view. Kiwi, similar backdrop to the Aussie, just so overbought. So I really like the GBP. On the Kiwi, let's do another pair. This is NZDJPY, and I really like the look of this one. This 70 support level here has been taken out. A couple of tests to get back through, can't. That should hold rallies, okay? Sell back to 70, or just above round number 69.12, you could go through 68.80 on the downside. We should get to 66, but I'm going to extend this target down to 64, so around 500 pips from current levels. The NZD, very similar backdrop to the AUD. They're both going down. I didn't look at NZD USD earlier on, so I'm just going to look at it now. I like the look of this one as well. Up we come to the 68 level, down, back to the 68 test. No more buyers here. Down, 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 and we're just below the 66 level. That is resistance. Okay, that should hold. You could sell if we go up there again. We'll just sell through this low here, which will be below the round number. So I think 64.85 or something like that, and then we should be on the way down to the 60 level. Okay, there are plenty of more pairs I could look at actually. USD pairs, many of the exotics, lesser looked at pairs look really, really good. But I think we've done a good selection today. If my scenario comes to fruition that I've outlined in the other video about the elections unsettling the market and also the S&P having a good sell-off, all these positions will do well that we've looked at, and they're doing okay at the moment. Said it I think in a few videos recently. Yeah, July and August were not good months for us at all. September though, really, really good month, and hopefully last few days we get a real boost in terms of building on what has been a great profit this month after two rather poor months in my view. But yeah, could see some exciting action the week coming up. We shall see. Right, that is the video. Thank you very much for watching me. Take care and have a good day.